I think we're at the turning point, and a significant turning point. And I'm not talking about today or tomorrow, I'm talking about the next 4 weeks to the next 6 weeks.
Hey guys, welcome back to Library of Wealth. Today we have the CEO of Real Vision, Raoul, talking about the unforeseen changes coming to the crypto industry. Powell is expecting a major shift in the coming weeks, surprising many people who are taking short positions in cryptocurrency. This will change the positioning of the markets, which are extremely underweight. The crypto market is currently in a frenzy, with the price of Bitcoin and Ethereum plummeting in the past 24 hours. The total crypto market cap is now sitting at $914 billion, a 10.6% drop just in the last day alone. The dollar is the other crucial variable, as we're now in a pure macro environment. It's not yet clear if the dollar will either move a leg higher or will go through a correction in the next few months. Let's check out this interview with Raoul as he gives his take on the current crypto and stock markets and where we're headed next. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
And this is my thesis of the exponential age, is we're about to go through a period of exponential change, the fast adoption of technology of all human history, which is AI, robotics, space, EV, Internet of Things, distributed computing, genetic sciences, longevity sciences. All of these things are all happening at the same time and all linked to each other, blockchain technology. It gives us a potential to generate productivity growth. So that's at a big picture level. So we need 10, 15 years for the technology to start driving productivity, for the baby boomers to die off, partially, and for us to run negative real rates so the debt burden's okay. That's what I think the big picture is. Where inflation remains within that picture, does it go back down to lows? Does it get sticky? At a big picture level, doesn't really matter, because it certainly won't remain high because the economy can't take it. It's a net tightening of financial conditions in itself. So that's what I think is going on at big picture level. And then to shrink down to where we are today, well, we've got the tightest real rates you can imagine, considering the amount of debt burden, if you adjust it for debt. You've got, net tightening of financial conditions caused by commodity prices, the dollar, everything else. So the probability and the forward-looking forecasts are that GDP growth will fall significantly and inflation fall significantly. Where does inflation end up? None of us know yet, and we can debate that all day. We just don't know, but the probability is that inflation falls. So then let's go down to the issue that's at hand, which is today's story because of the Fed. What are the Fed about to do? Now the Fed know that the economic growth data is falling apart going forwards. Everybody knows it. The question is how do they stop inflation expectations rebounding when markets rebound? Because they will. The moment they pivot, markets will rebound. That's okay, but they can't drive expectations of inflation driving, because inflation is not the stock market. But it's all partly tied in. The oil market's obviously a big equation in this. My guess is the Fed will start to slow down the rate of change of increases, and all that matters in financial markets is rate of change. The markets pick this up. I think the crypto market picked it up first. Long end of technology and a few other things have started to pick it up as well. So the rate of change changes, and then the next part is something to do with either changing the regulations, forcing the banks into the reverse repo via Basel III. And Yellen's already talked about they're talking to the regulators to see what they can change. If not, it's the Treasury buybacks or increasing some liquidity into the Treasury market, which has become much less liquid than it usually was and is creating a problem. Then after that is, I think, the Fed pivot once inflation falls below Fed funds. Now, where's terminal Fed funds? I don't know. I'm guessing somewhere between 4 and 4.5. So when does inflation get below that? Every forward-looking indicator I've got from inflation looks like it falls through Fed funds by about March, April. So that's the sequencing of events. I think we're at the turning point. If I look at the forward-looking indicators that I use, like my financial conditions index and a whole bunch of other stuff, Chinese credit conditions, they're all signifying that the bottom of the cycle is probably in Q1. So, okay, so the bottom of the cycle, we've got the worst part to come still. We've got the ISM to get from here down to 40, but the bottom of the cycle comes in Q1 and the markets are start to forward look. So that's kind of where I think we are. I think we're at the turning point, and a significant turning point. And I'm not talking about today or tomorrow. I'm talking about the next 4 weeks to the next 6 weeks. So reasonably short-term time horizon. So it's coming down. I've got a lot of technical signals that say the same thing, whether it's tops in the dollar, and that'd be probably a temporary top, the potential lows in the equity market, potential highs in bond yields, and we had a lot of signals and lows in the crypto market. So that's it in one go. There's two big things, I think, is when we step back, people hear me talk a lot about debt, demographics, all of these things, but what it is, and I kind of distilled my thinking down, is what is GDP? GDP, essentially GDP growth over time, not quarter by quarter, is driven by demographics, i.e. population growth, plus productivity. That's the kind of magic formula. Once you understand that, you can build a framework around it. And the framework of understanding is, as I've been talking about, demographics as a net draw. And I know there's some arguments out there from others that maybe the capital gets released by the baby boomers and it could be inflationary. There's no evidence of that anywhere in the world yet. So, that's a risk to the view, and that's fine. So demographics is a real problem for the Western world plus China, plus Southeast Asia. Aging populations mean GDP growth goes down. What we've seen is, because of globalization technology, too many people in the workforce at the same age, the baby boomers, they've competed for wages, and real wage growth has been flat for 40 years. So i.e. the average American has had zero increase in wages. And why that's occurring is obviously the competition at wage level, i.e. 76 million boomers competing with each other and now competing with their kids. They're both in the labor force at the same time, competing with AI, robots, the internet and everything else, competing with Chinese workers and Indian workers. I mean, that's a pretty difficult environment for everybody. Nobody really wants to increase immigration. So Alf, you're in Italy. Italy had a huge immigration and everybody wants to slow it down because it's hard to digest at societal level. The UK had the same, Germany's had the same, Denmark's had the same, Sweden's had the same, everyone's had the same. So population immigration, not that these populations are particularly against immigration, but there's a limit to the number of people you can accept at any one time without society breaking, because what happens is there's too much competition for jobs again. So you lower the real wages of the population.
This week's crash brings a sudden reversal after weeks of relative stability for Bitcoin and Ethereum prices. Both tokens are now down more than 20% over the last week. Raoul Pal believes that we aren't going to retest lows based on growth, but that we'll have more sideways consolidation. He's noticed that crypto has become overbought, even though people were expecting it to go down a leg lower, very similar to the equity market. He's also seen that certain patents have now been put in, which is only a short-term correction. What do you guys think about Raoul Pal's opinion on the crypto market, as well as the effects of inflation we're seeing now? Let us know in the comments below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.